Our hearing has, on the agenda, there are some changes I want to make sure everyone realizes. Item number 8, SB 1262, is not on the agenda, and SB 1306 by Senator Renner is also withdrawn from the agenda. We do have an author. I want to thank Senator Ashburn for being here. I'd like to ask the other members to come on down, but we will begin as a subcommittee, and we will start with Senator Correa's bill, which is item number 3, SB 1028.
Thank you, Madam Chair and Senators. Senate Bill 1028. I'm introducing this bill on behalf of the State Board of Equalization in order to provide some flexibility for the members of the Board of Equalization to address the inequity of applying the entire month's interest to a tax or fee payment when the payment is made only 1 day late, and there's a reasonable circumstances beyond the taxpayer's control for such lateness. This bill will still require taxpayers to pay interest on the late payment, but only for the 1 day that it is late. This bill will apply to those taxpayers that are required to remit their tax payments electronically and who initiated electronic payment on the due date but inadvertently missed the 3 p.m. deadline. A payment of only 10 minutes late for these taxpayers automatically results in an entire month's worth of interest being charged. Typically, the payers mistakenly believe that the payments are actually due by the close of business days, such as 5 p.m., rather than 3 p.m. And as a result of this, they end up being charged or being liable for an entire month's worth of interest charge. I'd like to note that both the Franchise Tax Board and the Employment Development Department compute interest on a daily basis at a rate of only 4%, and that a taxpayer missing the 3 p.m. reporting deadline with those agencies would only be subject to 1 day's interest charge. I believe the Board of Equalization should have the ability to impose interest in a similar manner when the facts or the circumstances warrant such. I have with me today Sheila Walters on behalf of the Board of Equalization to answer any questions you may have of the bill.
Senator, I'm going to interrupt you. We do have a quorum. I would like to take roll, please.
Walk.
Here.
Walk present. Walters. Here. Walters present. Alquist. Ashburn.
Present.
Ashburn present. Padilla.
All right, we do have a quorum. Please continue.
I have some witnesses in support that I would like to
testify. In support.
Good afternoon, Madam Chair and members. Kyla Christopherson on behalf of the California Chamber of Commerce. We are in support of this measure. We think that this makes a lot of sense, especially for small businesses and sophisticated taxpayers who may have made an innocent mistake. And as we understand, this would only apply in situations where the board has already found that the taxpayer is essentially innocent and has been excused of the other penalties. Because they have discovered that there are no penalties that are appropriate. So in this instance, and it would be very narrowly applied, and we think that this is wholly appropriate and would improve the overall perception of the tax administration body in California being fair and equitable. Thank you.
In support, welcome.
Thank you, Madam Chair. Michelle Peelsticker, California Taxpayers Association. I'd like to associate my remarks with those of Ms. Christopherson and just also add that I think this is just a good business practice. It's something that we might expect from the private sector, and the public sector should also engage in such practices. Thank you.
Okay. Further in support? In opposition?
I'm just going to add that I'm Sheila Waters with the Board of Equalization, and just to add that we have the unanimous support of all board members on this.
Opposition? All right. Are there questions of Senator Correa? Bill's been moved. Please call the roll. Motion is due passed. Aye.
Walk aye. Walters. Aye. Walters aye. Alquist. Ashburn. Aye. Ashburn aye. Padilla. 3-0.
The bill is out, but we will keep it on call. We'll keep it on call because we have a couple other members that I'm sure would like to add on.
Thank you, Madam Chair,
and thank you,
Senators.
I'd like to do the consent calendar. Is there a motion?
So moved.
All right. The consent calendar includes item number 1, SB 1250 by Senator Ducheney. Item 11, SB 1492. Item number 12, SB 1493. These three are committee bills. Item 13, SB 1494. We have a motion. Please call the roll.
Wolk.
Aye.
Wolk, aye. Walters.
Aye.
Walters, aye. Alquist. Ashburn.
Aye.
Ashburn, aye. Padilla.
3-0. Again, we will leave that open for members to add on. Senator Lowenthal, welcome.
Welcome.
Item number.
You want me to come up? I just let you.
Oh, no, just saying welcome, and you can leave now. Item number 2, SB 996.
Well, this may seem like something you've seen before.
Yes,
This
welcome
bill
back.
has. I have never had so much time been spent on something that I really feel so strongly, and I can never understand why I have to do another bill on the same issue, but I'll get to that. You know, in 1979, when they built the Century Freeway in Los Angeles, in order to do the construction and to remove, there was a court case, and to remove a significant amount of housing, the courts said you have to build you have to replace it with affordable housing, and so that was the Century Housing, and it was over 220 units of affordable housing, and because it was affordable housing, it was a consent decree. It was a decree by the courts. It was eligible for the time for the welfare exemption, which affordable housing does, as long as it has a 50-year codicil and whatever the number of years, and it's maintained. Standard practice. Over the next number of years, the housing continued to have that exemption because it was only operated and owned by, because when Century went out of it, by other nonprofit housing developers, and so it stayed that way. The last one, just before that, the Long Beach Housing Development Company, is it? Housing Development Company took over. And I think it was the National Housing Trust, I think was the name. They said, look, Long Beach, if you take over this housing, we will give it to you at cost, what it's costing us, so it won't cost you. And they assumed also, and you'll continue on with the exemption, and so you can run this. At that time, even though Long Beach had been engaged in nonprofit and lots of public funding and lots of projects, they had a great deal. They had no. The bank said, look, because you have a steady income of tenants, you won't need to dip in and to use your public money. We will give you a loan for this, and that money for the loan can be paid off by, we believe you have enough income from the residents to do it, and that's what it was done. At the same time this is going on, the state found that there were a number of nonprofit housing groups that were really sham operations. They were slum landlords, and they were people who were declaring they don't want to pay any property tax because they're doing affordable housing, but in fact they were really landlords, that were buying up properties in mostly in urban areas. So the state, trying to fix this problem, said that you have to have some public money into it for a nonprofit at that time to get this welfare exemption. Well, they had already gone through, and they were now operating this. It had been a long time exemption. No one was really concerned about these properties because this was decent, not. And so all of a sudden they found out from the bank, from the county assessor, wait a second, the laws have changed. You can't get this exemption because we've changed the law, and there was no public money in this, even though there was an interesting case I mentioned why that happened in the first place. So we did a bill last year, which you all supported, came out bipartisan support, SB 1284, which we thought corrected the situation, and which the governor signed it. Then the county says, well, there are some things, the bank has already paid. The bill is not really clear. The bank has already paid some of those taxes. And now the bank, and so we'll suspend the money because of the way the bill is, the money that you still owe us, but the money that's already been paid by the bank for you, which is a significant amount. Remember, this was a private transaction, so the bank was paying this, and we always thought that that was also going to be clear in the bill, and it said it's really not clear in the bill. And we don't like to do refunds, which I don't blame them. I don't either. But this is such an injustice that was caught in the middle. So we're now back to clear up that language to do that. We have already had contacts this morning and with the County of Los Angeles. County of Los Angeles was concerned that this would be more than the 1% exemption that it would be, and we've assured them we would even take language, no, we're only talking about the exemption that's allowed, not all the other monies, property taxes that are paid that go for schools or counties. We're not going to ask, we're only asking for what we thought we always were entitled to, and that was the exemption for affordable housing. And this meets every single criteria, 50-year codicils, all the long-term things that affordable has. We thought we had fixed it last year. We need to come back and request that we clarify that this year, and that's really where we are.
Will you promise never to come back
I
again?
promise I will never come back.
Not that we don't like seeing you. In support of the bill. Others? Go ahead.
I'm Andrew Kincaid with Long Beach Affordable. Andrew Kincaid with Long Beach Affordable Housing Coalition, and this is, of course, on our behalf. It's a very, very closely drawn bill and only applies to us in this particular case with Caltrans Properties. The Senator has said pretty much the case, and I hope that we're able to conclude this very soon. Appreciate it. Thank you.
All right. Any others in support of 996? Any in opposition to 996? Come forward.
Good morning, Joseph Kelly, Chief Deputy, Los Angeles County Treasurer Tax Collector. I'm here to voice opposition to this bill. Our office, working with the assessor for the county and the auditor controller, we've identified a total of approximately $665,000 paid over years 2003 through 8 on 14 properties. Those properties were not exempt at the time the bills were issued. Various financial institutions did make those payments. The auditor controller has apportioned that money subsequent to receipt. It has been apportioned to every taxing agency and district within the county. To refund that amount of money at this point would be a fiscal hardship for not only the county, but Incorporated City, City of Compton, City of Linwood, as well. We have a concern because some of that money, and I understand wasn't clear to us that the refunds were limited only to the 1% ad valorem. About 114,000 of that 650 was paid out for various debt service, and we did speak yesterday with bond counsel, and we do have some significant concerns about including specifically the refund of that money in this bill, because that could compromise the covenant between the bondholders and the county as issuer. So for those various reasons, as well as just the precedent it was set, the county opposes this bill.
Others in opposition? All right. Questions from the committee? Move the bill. Bill's been moved. Senator Lowenthal, perhaps you'd like to address the opposition in your close?
Well, as I said, we've already started the discussions with them. We definitely want to limit it just to that welfare exemption that we had, not those other fees that would already been paid, because we realized they would have been anyway. We're only talking about that part, which never should have been taken in the first place. That this is the only place that got caught in this squeeze, and they had already did not know it until the county had told them that they were caught in the squeeze. And so this is just the yearly continuation of trying to fix a problem. And And so we're trying to fix this problem, and I promise you I will not be back again if we can fix it this time.
All right. There has been a motion. I'd like to encourage you to continue to work with the auditor controller,
Treasurer tax collector.
treasurer tax collector, in order to make certain, and with our staff to make sure
Yes.
that the language is as narrow as can possibly be drawn.
Which we
These are
thought was
truly-
last year.
Yeah, these are truly unique. It's a unique set of circumstances, and we don't want to see you again.
Thank you. I appreciate that,
Nothing
Senator
personal.
Walker. Senator Ashburn.
Affectionately. Please. The motion is to pass. Please call the roll.
Walk.
Aye.
Walk, aye. Walters.
Aye.
Walters, aye. Alquist. Ashburn.
Aye.
Ashburn, aye. Padilla.
3-0. It is passed, but we will leave it open for the other members. When
Thank
they
you. I
arrive.
appreciate that.
Thank you. Senator Cedillo, just in the nick of time. You're on. Item 4, SB 1036. Take your time. We're doing fine.
I wonder if I should look at my file or not.
The only thing that I need to ask you before you begin is whether or not you will be offering amendments, I believe, to
Yes.
tighten up the confidentiality
Yep.
piece of
Yep.
this. Good.
So,
Go ahead, Senator, whenever you're ready.
well, I was just telling my staff, one of the great things about being in the legislature is that you start off with a bill that's modest, as we did. I think it was AB 36, maybe? 63.
Who's counting?
Right, I'm a little dyslexic here. And it has its success, and circumstances evolve. And then we get to a scenario where the success of that bill is more needed and more urgent, and it creates an opportunity for us to take a successful bill that's been tested, that we don't speculate on, that we don't have to evaluate, and then say, let's take this into a broader arena. This bill basically, for all of us, provides new revenue without any new taxes. It makes sure that we protect, obviously, always our concerns for privacy. And in this instance, because things have changed and we do have challenges, something that my colleagues on the other side of the aisle always favor, is that it's an opportunity to create these public-private partnerships so that it's not just a reliance on government to bring in the resources, but to work with the private sector using their efficiencies to bring in resources so you get new revenue, no new taxes, public-private partnership at a time of great need. I ask for an vote.
In support.
Madam Chair, members, David Jones on behalf of the California Municipal Revenue Tax Association and the City of Newport Beach. CMRTA is the sponsor of the bill. As the Senator mentioned, we think this is a modest step forward on a very proven program. This allows third-party agents to assist us in collecting the data and preparing the data to collect duly owed taxes. The taxpayer information is provided by taxpayers. Either they come to the City Hall and they ask for a municipal business license permit, so they provide the data to us, or they file their state returns and claim to be a business. So it's only that data that's provided directly by taxpayers that is used. We do not go out and hunt for additional data. So it's important to know that we are not looking out there rattling the cages for Grandma to find something else. So this is duly owed taxes. Why third party? In these tough revenue times, we're finding that many municipalities are, just like the state, is lacking the resources to do this kind of function. And this is exactly the kind of function that you would want to have a third-party private consultant do. This, by its nature, is a one-time event. You do it once a year. It can be several weeks. You wouldn't want local governments hiring additional staff internally with pension benefits, et cetera, to do this task. So from our perspective, this makes perfect sense. Confidentiality, we agree, is the key to this bill. We are very willing to work with the opposition to strengthen if they can show us that they think that there's additional needs for confidentiality protections. We will be willing to work with them to take that. As the Senator mentioned, we have no new taxes are raised. This is a very, I think, straightforward measure, and we'd be happy to answer questions.
Thank you. In support.
Hi, my name is Andrew Thompson. I'm the Revenue Supervisor with the City of San Rafael, and I'm also representing the CMRTA. David's already provided most of the reasons that the City and the CMRTA are supporting the bill, so I won't repeat them. But I would like to note that the measure is about fairness and doesn't ask businesses or taxpayers for anything new beyond what they already provide the Franchise Tax Board and what the Franchise Tax Board is already providing cities. We view this bill as a win-win for the Franchise Tax Board, cities, and private industry. And more importantly, it improves tax collections for both the state and cities without raising taxes. And I am available to answer any technical questions you might have about how the program works and the safeguards that are currently in place to protect the data.
All right. Thank you. Further in support.
Madam Chair, members of the committee, Christy Baumer representing the California Professional Firefighters. Based on the author's opening statement and my conversation with Mr. Ashburn, I thought I might be on the wrong bill with all this talk of public-private partnership. But we are pleased to support this bill. Public safety is a primary function of government, and the best way to fund public safety without raising taxes is make sure you're collecting the taxes that are due. So we're in support.
All right. Further support.
Madam Chair, members of the committee, Roxanne Miller representing the City of San Jose. We were here with Mr. Cedillo on 63. That longevity, that program has proven to be highly successful, very effective, and we need it now more than ever. So thank you very much. We ask for an aye vote.
Further support? Opposition? Please come forward. I'll ask you to just cede your place. Yes, welcome. In opposition?
Yes. Michelle Peelsticker, California Taxpayers Association. We're opposed to this bill. We don't have concerns about public agencies sharing taxpayer information, but we do have strong concerns when that information is shared with third parties. Oftentimes, consultants work on contingent fee arrangements, which could present a conflict of interest. And there is some history that has been reported about the mishandling of taxpayer information about private firms. So for those reasons, we have some concerns about this bill. If we want, I'm willing to work with the author to talk about things like contingent fee arrangements and confidentiality. But other than that, I would be opposed to this bill at this point.
I want to make sure you've seen the amendment.
I have not.
Aha, good. Well, here. Take a look and continue working with the author. Thank you. In opposition?
Thank you. Kyla Christopherson on behalf of the California Chamber of Commerce. I would concur with my colleagues' comments that we are in opposition for those reasons. Additionally, even though we appreciate that even the current version, and I have not seen the amendments either, but I appreciate that even the current version of the bill did try to have some parameters around confidentiality. Nevertheless, once the information is provided to a third party and there has been a breach of confidentiality for a taxpayer, they are kind of in the position of once the cat's out of the bag, it's out of the bag, and their privacy has been breached, and it's not something that's easily reversible. There's not much recourse for that. So that's why we're especially concerned about that. Additionally, I just wanted to note the earlier legislation that Cal Chamber had no issue with the sharing of the information in the earlier legislation. I believe that there was local chamber support for that earlier legislation in recognition of the appropriateness of enforcing taxes that are due and allowing enforcement to proceed. And we certainly are supportive of enforcement of the current law in a manner that's fair. And one of the things that I have observed, however, personally, is a number of small businesses calling me personally from around the state over the past several years, very concerned about the manner in which that sharing program has evolved. And essentially, for a number of small businesses, they've been contacted by tax collection agencies on behalf of localities, and the manner in which they've been being contacted, they feel is harassing in some instances. And I'm not saying it's necessarily Los Angeles or a particular locality, but these various small businesses from around the state have felt very intimidated and harassed by some of the manner of the collection. And also, there seems to be an element of notice and fairness missing with some of these local collections, because unlike the state tax laws with localities, there are any number of local business taxes, distributing fees that apply in cities and as well as counties. And a business that may be, for example, distributing in a number of localities, they're not even located in some of the counties or cities that they're doing business in, they may not be aware of all the different business license fees that are out there, and there's not really a central repository for businesses to be able to check on that and be aware. So I've just noticed over the years that there does seem to be an element of notice and fairness missing in terms of local taxes. While it's appropriate to collect those, by the same measure, there needs to be more fairness for especially unsophisticated taxpayers to be able to track taxes that they owe, so that they aren't surprised, 10 years after the fact with a notice for back taxes. So with respect to that issue, extending the sharing to third parties, we feel would exacerbate those problems that are already occurring, and then, the confidentiality. But I concur with CalTax that we're certainly willing to work with the author's office to see if there's a way to work with the language to address those concerns. Thank you.
Is there anything in the bill that requires that the public entity seek payment of these taxes owing prior to referral to the private collection agency that this bill would provide?
We have one of the sponsors.
Could you repeat the question, please?
Is there anything in the bill that requires the public entity to have notified the taxpayer that they owe taxes that are not paid prior to the referral to a collection entity as provided in the bill?
I don't believe the bill addresses that. Most cities...
Senator Cedillo, would you accept an amendment that would require the public entity to first accomplish a notice to the taxpayer from the governmental entity itself that they are seeking payment of the taxes with a reasonable payment period prior to the ability to refer to the private collection agency?
Senator, I think that seems, I think you and I and all of us would agree, that seems almost as a matter of course.
Right.
That local entities would do that as a matter of course. It seems
you would think
for
so,
all of us
but
that
it's not
notice and
explicit.
opportunity to respond is the first premise before we would move on. And so I'm happy to work with the staff and with your office so that we could reach that in a way.
Good.
I mean, it just seems. I mean, it seems almost without saying. But
it does. But if it's not explicit,
right. Yes,
there could be a problem.
Yep.
And so,
no. I think we all share that same concern, and I would be pleased to help reach that conclusion.
Okay. Let's see. Further opposition? Further questions? All right. Do we have a motion?
well, I just want to comment. The Republican analysis indicates that this is maybe a measure to be opposed. These are taxes owing. They're not new taxes. They're not new fees. They're not license fees. They're not anything that is newly established as a result of the bill. Taxes and fees and assessments and charges already in place, not paid by the taxpayer.
Mm-hmm.
under the discussion we just had, the governmental entity will be required to first seek collection on their own. Under this bill, it will allow the local governmental entity to do something, let me see, contract out.
That's correct.
Contract with the private sector. I would say to my Republican colleagues, is that not consistent with something that we talk about quite frequently? Seeking the expertise of the private sector to get a job done. And so with the commitment to work on the issue that the governmental entity must first seek payment, and the confidentiality assurance, and that it provides no new taxes, fees, charges, or assessments, and that it provides for contracting out to private sector entities, I'll move the bill.
Thank you. Senator, do you wish to close?
I do. Because I share the observations of my colleague. I think it's noteworthy that the Democrats advocating a public-private partnership, as I prefer to talk about, public-private partnerships where resources don't exist to make government more efficient and more effective, to raise revenue without raising taxes. I think some might caution the chamber of being so outspoken against these public-private partnerships or against the efforts for more efficiency in government, particularly in this area where revenue is due and owing. So I'm happy to work with my colleague on resolving this, because I want to be clear. I think we really need to make sure that the first opportunity to notice the taxpayer comes from government, and whatever the appropriate agency is that has that information needs to inform you, the small business. Here's your bill, it's due and owing. But then beyond that point, once your bill is due and owing, then we need to find the resources to bring in the revenue, because this is the state of our economy today. And government cannot operate without revenue that it's owed. We all have different views about what that amount should be, but once it is determined what the amount is, then we all must be responsible in fulfilling our obligations. That will bring new revenue, as stated, without new taxes, in a more efficient initiative through a public-private partnership. Ask for an aye vote.
Okay. The motion is to pass as amended, including the amendment on confidentiality and a commitment to work with the committee and Senator Ashburn on being explicit about the notice coming from the public entity first.
Yes.
Prior to contracting out. Is that correct? All right. Please call the roll.
Wolk.
Aye.
Wolk, aye. Walters.
No.
Walters, no. Alquist. Ashburn.
Aye.
Ashburn, aye. Padilla.
It's 2-1. You need one more vote. We have members that are missing. It is on call.
I thank you.
Senator Price is here. Come forward. Senator Price, item 6, SP 1076. All right, welcome, Senator.
Good morning.
Afternoon.
Good afternoon. Madam Chair and committee members, SB 1076 would allow taxpayers to make voluntary contributions to the Arts Council on their state personal income tax. The purpose of this bill is to provide an additional source of funding to support the arts within California. The Arts Council will establish resources to non-profit organizations, schools, and communities throughout the state. Block grant funding, which was once given directly to the schools for arts education, as you know, has been suspended. As a result, California ranks 50th in the nation in funding of arts education. SB 1076 can potentially offset past reduction in funding. I have the honor of chairing the Joint Committee on the Arts, and in this role, I've met with and heard testimony from arts teachers, educators, and organizations concerning funding issues and the impact that the loss of arts programs has on our state. Quality art education is vital to the development and enhancement of the talent and promise of student performers. For those students that are fortunate enough to take part in such programs, they learn the art of creative endeavors while enhancing their confidence, self-esteem, and appreciation of the state's cultural diversity. Arts programs not only provide value to our community, but also provide jobs. An investment in the arts is an investment to our state. This bill gives Californians an opportunity to voluntarily fund the arts without a fiscal impact on our general fund. Arts are essential for cultural, educational, social, and economic development in California, and I respectfully ask for your aye vote. With me today is Muriel Johnson, Executive Director of the California Arts Council, and Kathy Lynch, Executive Director of California Alliance for Arts Education.
Okay. In support, welcome to both of you. Good morning. Afternoon.
You said it first.
I know.
I always go by the channel.
Feels like morning.
Speaking on behalf of the California Arts Council, we are thrilled that Senator Price would put forward this option for us. I would just remind you all that in the huge bust of 2003-04 in this state, we came down from $30 million just 3 years prior from the general fund to $1 million. And there we've rested until this very date. Only now it's $999, something like that. It's down a little bit, but all of these things are because of furlough adjustments, and the state spending has been flat, really, basically, for these 5 years since the big drop. So that's a huge 94 or 95% drop in your budget at one point. We've been very fortunate to find other ways, and the NEA has helped us, and our license plate has helped us. But the funding we give is not nearly enough to do what you'd like to see in arts and education. And we truly would like to have this kind of funding, which is voluntary. And that's the main word to remind us all, is that this is somebody's voluntary choice. And if they would see fit that we would receive $250,000, that's a whole other program to bring more trained artists who are teaching artists into the schools. We have not nearly enough to bring more benefit and more grants to our rural counties and our underserved, which we do now, but often at about 500,000 or something all across this huge state. The thing is, California is awfully big. For us to divvy up $3 million in those kinds of grants through every place in the state is not easy. I will tell you, we attained one of our goals this year. Our council said we want you to hit at least 95% of the counties, which covers all the legislators' districts, and this year we did. We actually provided a service, a technical assistance, a special meeting, a visitation, or a grant, or poetry out loud to 95%. That means there are 3 counties that we did not get to this year. And they are targeted for next year, of course. But it's been a goal to try to reach out as far as we can, and it's really important. There's not much art going on in schools. And there's not a lot of art going on in our rural counties sometimes and in our underserved areas. So this would be gratefully received, utilized for arts in schools and communities and for grants all over the state of California to those in need.
Thank you. Ms. Lynch.
Good afternoon, Madam Chair, members of the committee. Kathy Lynch, I represent the California Alliance for Arts Education, the California Arts Advocates, and the California Association of Museums, all in strong support of this bill. It's an honor to be here today, to be up here with the chair of the Joint Committee on the Arts. We very much appreciate his leadership in this effort as a spokesperson for the arts. In 2003, California ranked last in a per capita investment in the arts. I know many of you have heard this, but for the state of California to rank dead last with an average of 3 cents when the national average is $1, I think that we have to take pause and try to determine some new investments. This is a creative approach. It is voluntary. It does provide, the Arts Council probably does a better job than any state agency in government in leveraging dollar for dollar their contribution back into the communities. This can serve arts education, artists in residence, rural and underserved communities, and the artists who we forget that the creative industry that the arts bring to our economy, they are a very important component in our economic recovery and our infrastructure. So we urge your support today. Thank you.
Okay, thank you. Others in support? Anyone in opposition? All right, hearing none, are there questions from the committee? Would you like to close, Senator?
Just that it is a voluntary program, and the opportunity to help fund arts education, I think, is a important investment we can make in our future. Humbly ask for your aye vote.
Thank you. Yes, Senator.
If I may, prior to the vote, this is a real difficult vote for me because I am a big supporter of the arts. I'm very pleased to be on the Select Committee with our distinguished chair, Senator Price. I really believe that our students especially ought to be exposed to the arts in so many different ways. However, I have a consistent voting position where the tax form, in my view, is for the purpose of paying your taxes, not for charitable fundraising. There are many good causes that have found their way onto the tax form because of the action of the legislature. Some of them providing funding for medical conditions that are literally life and death. And I have consistently voted to oppose using the tax form as a charitable fundraising instrument. As worthy as this is, I wish there were another way. So regrettably, I'm going to have to be consistent and cast a no vote.
All right. Is there a motion? I will move SB 1076. It is due pass. Please call the roll.
Wolk?
Aye.
Wolk, aye. Walters?
No.
Walters, no. Alquist? Ashburn? Padilla? 2-1 vote? I mean 1-1.
1-1. Was there a no? He didn't. Okay. The vote is 1-1. There are other members. It's on call. You need two more to get it out. All right. Thank you. All right. Senator Runner. Senator Runner, this is 1133, governmental reorganization. An intriguing bill. It is, of course, a candidate for suspense because it ain't cheap. Beyond that.
Yes.
And then we'll talk later.
Sure. And let me. This is very brief because this is a concept that has been obviously talked about and dealt with in a lot of different directions, including currently in budget discussions. I think it certainly is. We need a dialogue afterwards. Thank you, Madam Chair and members. SB 1133 abolishes the Franchise Tax Board and transfers the agency's power and duties as well as the tax administrative functions of EDD and the Department of Insurance to the State Board of Equalization effective January 1st, 2012. Because California tax revenue collection agencies, BOE and FTB, perform many of the same functions, it makes sense that they should be consolidated into a state board of equalization. This would save tax dollars, improve tax enforcement, provide significant efficiencies for taxpayers. I'd ask for your aye vote. Let me have support speak first, and then we can have a discussion.
And then opposition, then we'll have a discussion. Yeah.
Madam Chair, members, David Wolf here with the Howard Jarvis Taxpayers Association. We're in support of SB 1133 for a number of different reasons. First of all, we do recognize that the state is facing a $20 billion budget deficit right now, and I think that anything we can do to consolidate our tax agencies, thereby limiting staff and building costs and saving money perhaps in that regard, would be a valuable effort to undertake. It's also frustrating, I think, especially for small business owners that potentially may need to go through both FTB and BOE in the course of their taxing decisions and may not fully recognize, for instance, that the BOE is the group in charge of sales tax while FTB handles income tax issues, and, you know, they get caught up in a runaround and it's very confusing for them. And I think consolidating those things would make it easier for especially small businesses and taxpayers in the state of California. So for those reasons, we'd ask for an aye vote. Thank you.
All right. In support? In opposition? Come forward.
Lenny Goldberg, California Tax Reform Association. We were almost there last year, I thought,
Yes,
but maybe I was the only one that was that optimistic with the governor's proposal. And let me say a couple things about, we've seen this many, many times, so I'll be very brief. For one thing, it cuts the governor and the Department of Finance and the administration entirely out of the tax system. Right now, the governor is on the Franchise Tax Board. The State and Consumer Service Agencies oversees the Franchise Tax Board on its budgetary issues. There otherwise would be zero involvement of the chief executive officer in the tax system. I think that's highly unusual, but whether it's unusual or not matters less than it should not be. The administration has to be involved in the tax system. Second thing is that this proposal makes effectively the Board of Equalization is administrator, regulator, and judge, jury, and executioner. That is to say, I don't believe you can ever consolidate under the BOE without having a separate tax court proposal, and many of the people who've supported consolidation under the BOE have also opposed any separate adjudicatory process. So it just doesn't work. But you have one agency, and I'm not sure why this is a conservative or liberal argument. I would think that as a conservative, you wouldn't want the agency to run the system, provide all the regulatory authority, collect all the taxes, and then when the taxpayer has a dispute, to be the judge of that dispute that you've already set up and created. So I just think that for fairness to taxpayers and for legitimacy in the operation of the system, that this proposal I think even to get to the next level has to be combined with a tax court proposal. Now, where we got last year was a consolidation under the FTB, and the FTB, we have to say, is nationally recognized as an exemplary agency, partially because of its independence and its sustained independence. Now, the governor's proposal didn't quite provide for that, but as I said, I thought we might have been pretty close. There have been other proposals for tax commissions, which would bring the governor, which would change the BOE structure, would bring the governor onto a tax commission or the Department of Finance. You'd have to then presumably add the treasurer to that. But this one, really, we don't think works from a variety of perspectives.
Thank you. Any others in opposition? All right. Comments from the committee. I'd like to raise some issues. We did have a hearing on this. Senator Runner, were you part of the committee at that point? I can't remember. I think so.
Mm-hmm.
Nope. And we made several recommendations to the Budget Committee that had a great deal to do with the fact that BOE and FTB were going to be making significant changes to their information technology systems. We talked about a single taxpayer ID, consolidating audit functions. Those were the kinds of things that were recommended coming out of a long history of other recommendations from the LAO, Constitutional Revision Commission. And I can't say what's happened to those. But this bill gives us an opportunity, it seems to me.
And we'd be glad to use that opportunity for further discussions. I think that probably my view about some of the recommendations that went on before were more tinkering rather than taking on the larger view, which is much more structural, which is what this attempts to do. Obviously, this is not a new discussion. This bill is similar to a bill that's been put forward before by Democrats and Republicans. Mm-hmm. The opponents, I think, lay out some interesting issues, but those are issues that have truly been discussed in many other areas in regards to the difference between an appeals process that is employer or driven by the taxpayer and accountants as opposed to attorneys. I favor this kind of a process as opposed to a court tax court process, which is then driven on the attorney's side. I think this gives access to citizens in a much better, fairer way. I think for us, what we'd like to see is, as this meets the criteria for your suspense, that this is a valid discussion to go on, because I think this not only talks about the potential of the issue of efficiency and making sense for people out there in regards to who does what when it comes to the issue of tax policy and appeals process and how that's all divided up currently. I think it also has the potential for tremendous savings. And services that are duplicated and training aspects. So I think all those need to be in that formula. So I certainly hope that it can be used for those further discussions, and would be glad to be a part of those. Thank you.
All right. I want to thank you for that. We'll move this to the suspense file, but I would like to continue working with you, your staff, and the staff of the committee, and see if we can come up with some kind of change that we think would get the support of not only the administration, but of our legislature. Okay. All right. Thanks. All right. We're moving on to Senator Weiland. Welcome. Item number 10, SB 1337. This, too, is a candidate for suspense because of the amount of money involved. Welcome, Senator.
Thank you, Madam Chair. Shall I begin?
Yes, of course.
Yes, there is a lot of money involved. Just to describe the bill briefly, I think you know what this does is, beginning in January 1st of 2011, eliminate the extra 10% withholding that was part of a budget deal several months ago from the tax payments that are in checks, which folks receive. And the idea behind this is simply that our economy is at least two-thirds, and in California growing greater, dependent upon consumption. And that consumption, in my view, is not only the actual dollars themselves, but it's part of consumer psychology, which is pretty well documented. And what I think we have done by neglecting to do the hard work of going through our spending and find excess spending that most of us would agree does not make sense. That would be the sort of work, Madam Chair, that you envision in your performance-based budgeting. Instead of doing that, what we've done is taken a simpler route, which is just simply to say, okay, we'll use this and this and this mechanism to increase revenue. And in this case, it's increasing its cash flow, essentially. In the other things that affected the average taxpayer, there's an element of choice. We increased sales tax. A consumer can decide, and some did decide, not to buy because of the increase in sales tax. That's a choice. That's a choice that the consumer has. Here, there's absolutely no choice, and because of its nature, it's almost like a stealth effect, a stealth attempt at managing cash, not just creating more money, but managing cash, because what I heard in my office were people calling up saying, what's going on? Why is my paycheck less? And I think the people that are very, very affected by this are those who tend to consume or who live paycheck by paycheck. Those are the ones who are not typically sophisticated enough to say, well, gee, the state has adopted this change in the law. I guess since my tax liability won't change, I'll go change my withholding. I understand that hypothetically they could do that, but in reality, I think it's not likely to happen. I guess secondly or thirdly, to the extent we are unwilling, which I think we ought to do, to find this money in the budget, there are other ways to manage cash flow. They're not ideal, but the state does it every year through selling of RANs, the Revenue Anticipation Notes. And even though we look at a state where the the debt rating may not be the best. As a matter of fact, it's towards the other end of the scale. There's a market for these things. They sell out. If you talk to the people who sell these things, they sell quickly. As a matter of fact, most California debt, there's a 1 or 2 day window for the public to buy the debt, and it sells out very, very, very quickly. So I don't believe that's the right way to go. I don't think borrowing is the right way to go about it, especially the short-term debt, because the Treasurer doesn't issue all of it. Some of it the Controller actually does. It's probably better when the Treasurer does it. But this is an attempt to say, look, we shouldn't take this extra money out of the paychecks of those who least can afford it. And if we leave that money in there, they are likely to end up enhancing the economy and creating greater revenue at the end.
Okay, thank you. Those in support?
Thank you, Chair Wolk. I think it's not on. Thank you, Chair Wolk and Committee. I'm Betty Jo Tacoli. I'm President of the California Small Business Association, but I'm also a small business owner. And I'm here to talk about this bill and why I think it's important to the small business community. I think this is an example of a bill that had good intentions, and there has been unintended consequences, again, to the small business community in particular. The other area that I think is very important is our employees happen to be more inclined to be minority and disadvantaged employees, and they are the ones that find it very difficult to meet these criteria. So I think placing interest-free loans on the cash flow of either our employees or the small business owners is not going to achieve the end results. But I think the consequences have been very interesting. One of the first things I ran into was where I went into a meeting and one employer was teaching another employer how to just increase the withholding numbers, the exemptions, and to keep the employees happy so that they didn't quit and leave the business. The other example that I have on this is, well, I actually have two more examples. One is where people were saying, well, just make them all independent contractors. And I'm saying, whoa, you're going to get in big trouble if you do that. So I want small business owners to perform according to the rules, but I think we need rules that are not adding to the administrative burden, and this has been one that has been horrendous. The other thing that's happened is the trend towards what I call the underground economy. Just more small businesses have chosen to go offline. They're upset with workers' comp is too high. They're upset with the different things. And this is kind of like the straw that broke the camel's back. So they're just saying, okay, I'm just going to be an underground business like I see some of my competitors being in that area. So I'm asking you to take another look at this because I do think it's unintended consequences. And I do think that the legislature is interested in helping us grow jobs, make more small businesses out there, creating jobs, and turning California back into the place to be in business and the place to grow and achieve. And so I would ask for an aye vote for SB 1337, and I will commit that I will help you get more small businesses and more jobs to make up the difference. Thank you.
Okay, thank you. In support.
Madam Chair, members, David Wolf here again with the Howard Jarvis Taxpayers Association. And we're concerned, I think, especially with this income tax withholding that was passed last year, that you are taking at minimum $200 out of taxpayers' pockets at a time that they can't afford it. And one of the reasons why they can't afford it is because last year this body passed the largest tax increase in the history of any state in the U.S., $12.6 billion of very regressive income, sales, and car tax increases. at, again, a time when we can't afford it. And one of the reasons why we can't afford it is California has a 12.5% unemployment rate, its highest ever, and individuals need every single dollar they can get their hands on in order to buy the necessary, food and clothing and other necessities that they need to survive. And the fact that you're taking this money out of their paychecks and they may not be aware of the ability that they have to adjust their withholding is, I think, egregious. And I think one last point to make is just the argument and the element of kicking the can down the road in the budget process, whether it's with this bill, whether it's with the potential perhaps later on down the line this year of independent contractor withholding, whether it's the accrual situation where you're paying the state employees on July 1st instead of June 30th, all these sort of budget gimmicks, if you will, that don't solve the problem, that don't cut spending, that don't limit budgets and just end up hurting taxpayers. So, for those reasons, we do think this is a valid bill and would ask for your support.
Okay, thank you. Further support? Opposition? All right, hearing none. Any comments or questions from the committees? This is a suspense bill.
Yeah, I just would like to make a comment. I just appreciate Senator Weiland for bringing this bill forward. We are in a fiscal crisis in our state, and we keep talking about stimulating the economy and bringing jobs into our state and having companies, private businesses, being able to flourish here. And by having interest-free loans puts a hardship on our small businesses, and we just can't afford to do that. If we truly want to get this economy going, if we truly want to get more revenue in the state of California, we have to give businesses an incentive to do business in this state. And this is a bill that would help encourage businesses to come to California or to stay here, which is the first thing. We need them to stay here. And so I just applaud you for bringing this forward, and I really, truly hope that this committee will see the value in this bill and get it off of suspense.
All right, Senator Weiland, thank you. Would you like to close?
Yeah, just a couple of points, Madam Chair. When I talked about the choice issue, which is different in these other areas, the car tax also is one where the consumer has the choice not to get a new car. Now, what we want is that consumer to actually say, you know what, things are turning up. There are good deals being offered. I want to buy that car. And some of this is not just the actual dollars themselves. Some of it is consumer psychology. The economists have done an enormous amount of research. Nobel Prizes have been awarded looking at the worldview of consumers. That's our economy. And I think to the extent we assume for a moment, although I don't want to, but assume for a moment that that spending was necessary, it would have been more responsible to manage the cash flow. And that's all this does. This truly kicks the can down the road. Because when tax day comes, all that money just goes back, assuming it's not IOUs, goes back to the taxpayer, and then you roll it over just like a credit line and start all over again. It's just not really a good way to manage things, and I think it would be, if it were eliminated and talked about, it would change the way taxpayers view the state, it would change the way they view the economy, and it would be a boost for all of us. Thank you very much.
Thank you, Senator. That will be moved to suspense, and I'm sure the discussion will continue through this budget cycle on this issue. All right, Senator Walters, item number 5 for the committee bills. Senator Walters, this is a good policy bill, but here's the issue.
Oh, yes.
No. Normally, it would go on suspense because of the cost.
Right.
The annual cost in subsequent fiscal years. But because doing so, frankly, would kill the bill, since it's not a tax levy, and because we didn't have time to change the file notice, I am suspending that rule, the suspense rule, to allow a due pass motion. So
Thank you, Madam Chair.
I just needed to explain that because
I appreciate
unusual.
it. You want me to go ahead?
Yeah, absolutely.
Madam Chair, members, I bring before you Senate Bill 1065, which brings California tax law into greater conformity with federal tax laws by relieving an innocent spouse from having to pay the other spouse's portion of income taxes under specified circumstances.
Did you say conformity?
Conformity.
You try not to use that word.
Okay. Heard it too much?
I just get a tick.
California did have innocent spouse, there's that word again, conformity provisions. Sorry. But they sunset at the end of 2008. SB 1065 reinstates those provisions permanently and updates to reflect new federal relief laws. Specifically, SB 1065, I'm just going to ignore the word, state tax law to federal law related to innocent spouse relief by reinstating an expired provision that allows the FTB to grant innocent spouse relief when similar relief has been granted by the IRS, and by allowing taxpayers to appeal the FTB's determination on an equitable relief request. With me today on behalf of the Franchise Tax Board, and to answer your question, is Mr. Brian Putler.
Welcome, Mr. Putler.
Thank you, Senator.
Support.
Brian Putler, Franchise Tax Board. The board is the sponsor of the bill, and from the perspective of the FTB staff, you can't have enough conformity.
I know. It's a good idea. That's all.
And that's it.
Okay. Any others in support? Anyone in opposition? All right, hearing none. Any questions from the committee? All right. The motion is due pass. Do I have a motion? Been moved. Please call the roll.
Wolk.
Aye.
Wolk, aye. Walters.
Aye.
Walters, aye. Alquist. Ashburn. Padilla. Ashburn, aye.
Aye.
Padilla. Aye. Aye. That's 4-0.
4-0. It is out. All right. We are at the end of the agenda. The special order tax reform. I have two bills. Senator Padilla. Senator Walters. You're the vice chair. I'll ask you to chair, please. I need to take my book.
You're going to do SB 1113 first?
Yes, I am.
Okay.
Madam Chair, members of the committee, SB 1113, first I have to announce that we will take amendments in the Senate Judiciary Committee responding to the comment E in the analysis. We will limit the cases that the FTB can seek review on to only those which exceed $100,000 in personal income tax liability and $1 million in corporate tax liability. We can't take the amendments today and still have the measure heard on time next week. Please keep in mind that a taxpayer who has an issue of $100,000 in liability must have an adjusted gross income of $1 million. Only 1% of taxpayers have this much income. And secondly, the $100,000 limit applies only to the issue that gives rise to the legal issue. The taxpayer could have many more issues on the return, which means he or she has much more than the $1 million in income. On the bill, every panel ever assembled to consider tax reform in California, from the 1930 Reform Commission to Governor Schwarzenegger's Commission on the 21st Century Economy, has recommended that California adopt an independent tax dispute resolution forum. Having authored previous efforts to establish a truly independent tax court, such as AB 2472 in 2004, and understanding that we do live in an era of fiscal limits, I bring forth SB 1113, a modest but needed reform which will allow both parties in an income or corporation tax dispute to ask the courts to take a fresh look at a tax issue. Currently, taxpayers can appeal to the Superior Court for a new trial when the BOE agrees with the state, but the state has no such right when the BOE sides with the taxpayer. This bill will bring additional rigor to BOE decisions by ensuring that the courts can bring judicial review at the request of either the taxpayer or the state. BOE will have to factor in the possibility that the state may appeal if their decisions are not founded on sound legal precedent. Courts will be able to apply judicial review to important cases which now end at the BOE. we're more likely to create better legal precedent that enhances certainty for both taxpayers and tax administration agencies alike. I ask for your aye vote.
Witnesses in support.
Good afternoon, Madam Vice Chair, Madam Chair, members of the committee. My name is Alan LaFaso. I'm Board of Equalization Chairwoman Betty Yee's Chief Deputy, and on her behalf today, we're here in support of the bill. Board Member Yee has actually great confidence in the Board of Equalization process, which we believe is a very low-cost, accessible tax dispute resolution process for a wide variety of taxpayers. But frankly, because we do have a lot of confidence in that process, we welcome the rigor that this bill would bring in terms of review of our decisions, and believe it does stand for a very important principle that both parties should be able to appeal those decisions on equal terms. With that, we urge you to vote aye. Thank you.
Yes, Lenny Goldberg, California Tax Reform Association, in support. We create a lot of tax law does get created on appeal in the courts as issues work their way up through the court system. You find you get significant decisions that sometimes we in the legislature come back and then conform law to, or that establish significant precedents. All of those cases are only brought by the taxpayer, and there are whole areas of law in which the FTB may feel that, with all due respect to the BOE process, may feel, and which does not, in many cases, have published decisions. In some cases they do, or published opinions. There are significant areas of law that need to be brought forward, that need to be adjudicated, that are stifled by the fact that the FTB cannot come forward into the courts. It's less, I think, a revenue issue than a fair treatment with regard to both sides in a tax dispute. So we support the bill.
Thank you, Madam Chair, members of the committee. Jeremy Smith here on behalf of the California Labor Federation, also in support.
Witnesses any more in support? Witnesses in opposition? So much.
Couldn't last. That's okay.
Michelle Peelsticker, California Taxpayers Association. First of all, I'd like to thank the author for the amendments to the bill. Those are good amendments. Unfortunately, we're not there. And the reason is this bill sort of turns the whole concept of burden of proof on its head, in the sense that a taxpayer has the burden of proof when the taxpayer asks for a refund. The taxpayer has the burden of proof when they are defending against FTB action. Now the taxpayer also has the burden of proof, and as a plaintiff in the Superior Court, even though the FTB is bringing the case forward. In any other circumstance, the plaintiff would have the burden of proof. In the current circumstances, the FTB would have to bring a writ of mandate in order to challenge the BOE's decision. They would have the burden of proof to show that the BOE engaged in an abuse of discretion. This is giving FTB two bites at the apple. They can, if the taxpayer wins at the trial court level, then the FTB can say, well, the BOE decision's entitled to little weight, and in any event, the taxpayer has the burden of proof here. If the taxpayer loses and FTB wins, the FTB can point to the decision and say, that's a great decision. It's entitled to great weight, and in any event, you have the burden of proof. So the taxpayer doesn't win for losing here, and for that reason, we would oppose this bill.
Good afternoon. Kyla Christopherson on behalf of the California Chamber of Commerce. We also are opposed for the reasons stated by my colleague. Additionally, just focusing on taxpayers and how this bill would increase the taxpayer burden in California, we are concerned that this would be doing away with the current system, which allows for an appeal at the administrative level before the BOE. For taxpayers, it's very important because it's much more cost efficient for taxpayers, especially those that can't afford to appear in court to be able to handle the appeal at the administrative level before the BOE. Often they don't have to retain counsel, or they don't have to retain as many counsel. Once you get into the court setting, there needs to be many more lawyers involved. Usually trials are lengthier, they tend to be costlier, and for those reasons this will be an increase on taxpayers in California in terms of burden. Additionally, we are concerned that this will create an unlevel playing field between taxpayers and FTB. Even taxpayers who have sufficient resources to go to the next step may be forced to just go ahead and settle meritorious claims because the amount in dispute won't justify moving forward. And although I appreciate the amendment offered by the author to limit these to disputes of over $1 million, or in the case of business taxpayers, and $100,000 in the case of personal income taxpayers. And that's an important distinction because in California, many small businesses pay under the pit. So I think it's important to note that even though those may sound like large amounts, it is very easy to have that amount in dispute as a business and as a small business. And so if this process, if FTB is allowed to appeal and the burden of proof is now on the taxpayer at the court level, as Ms. Peelsticker described, this may indeed cause taxpayers to have to settle meritorious claims because it simply won't be worth their while to have to go through all of the additional cost that would be required to go ahead and continue litigating this at the Superior Court level. So for those reasons, we're also in opposition. Thank you.
Any other witnesses in opposition?
Greg Hines, California Manufacturers and Technology Association. Echo the comments of the previous opposition testimony. Thank you.
Devin Whitney with Tech America. Devin Whitney with Tech America, also in opposition to this measure.
Jason Lane, California Bankers Association, also opposed.
Any questions from the committee? Comments? Would you like to close?
I would, and I would like to just mention a couple more things that came to my attention. The first is in the letter from Betty Yee. She notes that when other agencies are a party before the BOE in relation to a tax or fee program they administer, these agencies, in fact, can appeal a BOE decision. So I think that it's entirely appropriate that the FTB, on behalf of the state, be allowed to appeal as well. And if we have time, I would like Colin to describe the Argonaut issue, because in this case, why an appeal power by the FTB would have been appropriate in this particular case, because it turns on procedure rather than the substance of the issue. I think that it's a real good illustration of why this power to appeal would be a benefit. So you would explain that.
Madam Chair and members of the committee, Colin Grinnell with the Committee on Revenue and Taxation. I'm referring to the minutes of the Board of Equalization Wednesday, January 21st of 2009, when the board considered the Argonaut case. In this case, the BOE being a 5-member board, the BOE has has to respond to government code sections, which essentially have members disqualified from voting upon a conflict of interest, which would be generated by a campaign contribution. In this case, there was a contribution on behalf of the appellant to one of the members who had to disqualify himself. It was Controller Chung, Marcy Jo Mandel, on his behalf. Dr. Judy Chu at the time was not at the hearing. So when Dr. Chu was not at the hearing and Controller Chung was and his representative was disqualified, there was a request for the item to be put over for the next hearing. Unfortunately, that motion was not carried because it lacked a second. The board then voted 2-1 on behalf of the taxpayer. So there was no attempt for the state to be able to appeal that decision, which was one that was largely made on procedural basis.
So I would just like to close by saying that, by quoting Betty Yee again, the potential of an appeal serves to sharpen the decision maker, and providing all parties with the right to appeal contributes to the confidence in the fairness of the decisions, regardless of the outcome. I would ask for your aye vote.
Is there a motion? Please call the roll.
Walters?
No.
Walters, no. Walk?
Aye.
Walk, aye. Alquist? Ashburn?
No.
Ashburn, no. Padilla? Aye. Padilla, aye. What is 2-2?
2-2. So we'll leave the roll open. Okay. All right. Your second bill?
Yes, this is 1272. I'm first going to adopt the amendments that will respond to comment D in the analysis. So they will do the following. Instead of referring to bills that enact tax credits effective for taxable years on or after January 1st, 2011, the measure should refer to bills introduced on or after January 1st, 2011. The measure 2, the measure applies to measures which authorize a credit, but should instead refer to bills, quote, authorizing a new credit. To clarify the intent of the measure should include specific requirements for baseline data prior to the enactment of a credit, with data to be collected during the years the credit is effective to measure the change in the performance indicators. The sunset provision should be amended to provide that the credit endures for 7 taxable years instead of the 5 years from the enactment date. We've changed that. The bill says 5. We're moving it to 7. With a repeal date that is the 2nd January 1st after the operative period. And I want to add Senator Alquist as principal co-author. With all of that, today's public finance system in California requires major reform. I have pursued changing our budgeting system to apply performance measures for spending programs, and I'm trying to do the same with SB 1272, which would apply a performance-based methodology to future tax preferences enacted by the state. There's no good reason not to evaluate tax expenditure programs with the same rigor as that we should use when judging spending decisions, especially when California's tax preference portfolio now exceeds $41 billion, equal to 1/2 of our total revenue. While we cannot change existing tax preferences, we can at least start by keeping better track of future tax preferences. I ask for an aye vote.
Witnesses in support?
Thank you, Madam Chair, members of the committee. Jeremy Smith here on behalf of the California Labor Federation. Very proud to please to sponsor SB 1272. I'd like to thank Senator Woke for her guidance and help, as well as her staff's help with this. This is new territory for us in this committee, so we're helpful to have all the guidance. We're helpful to have all the guidance we can have. California ostensibly gives tax expenditures, or has created tax expenditures as an incentive for somebody or some entity to do something. Unfortunately, many of these tax expenditures have no goals, have no performance reviews, and have no language laying out what they're for. They just become, and they are. And we feel like it's time for some transparency. As Senator said, $41 billion is already going out or not coming in, I guess, if it's a credit, so to speak, every year. $14.5 billion is going to corporations. There's just no reporting or evaluation of that money, whether it's being used for what it was intended for when it was debated on the Senate floor or the Assembly floor, or when the governor thought of enacting it. I don't have to tell anybody in the committee, but it's worth saying that the state's facing a jobs crisis, 12.5% unemployment. Unemployment is up 170% since last year, 2.3 million total people unemployed. It's critical that state spending step in during this time to help create jobs, help get the economy rolling again, get people back to work. If not, that $41 billion, we believe, or part of it, could be better spent, perhaps, if that money is not creating jobs, or if it's incentivizing actions that would already take place. The Ledge Analyst's Office has noted several problems with the tax expenditure programs in California, 3 of which are limited legislative review, which we hope this bill will fix, a no cap on the amount of money spent, and a vote requirement of a simple majority to enact, but a 2/3 vote to take back or eliminate. We're glad that there'll be some oversight if SB 1272 passes to have this body and the Assembly or the Senate look and see what happened over the last 7 years, figure out if the tax expenditure has met its goals, whether it's done what it would intended to do. And finally, I'll just say that this is a package, part of a package of bills that the Labor Federation is putting forth. We just feel like it's time in this tough budget era to figure out ways to spend money better. There's a lot of money going out. At the same time, we're talking about critical budget cuts to CalWORKs, Healthy Families. We require IHSS recipients to be fingerprinted, to report their income, to report their work status. We require a lot from low-income folks who depend on the state for health care, et cetera. We require very little from corporations or other entities or individuals who receive billions and billions of dollars in tax credits every year. They're required to give us very little feedback about how they're spending that money and whether it's going to create jobs or help economy. So for those reasons, we support the bill. We're proud to sponsor it and here to answer any questions. Thanks.
Madam Chair, members, Christy Baum representing the California Professional Firefighters, also in support of the bill. Tax credits are like faith-based budgeting. You offer a credit and then you hope that your expectation is fulfilled. And that the activity that you're hoping to motivate actually occurs. So I think it's very reasonable to at least have some accountability with these expenditures so that when you pass them, you can check your work. Just like when you pay a bill, you usually get to pay it at the end of the service. You already know if you've received it satisfactorily. Here, this is just kind of like a check-back provision. It's an important bill. We support it.
Hi, I'm Jessica Bartholow with the Western Center on Law and Poverty, and we support this bill, especially during a year when we're considering grave cuts to the social services serving poor people. Thank you.
Lenny Goldberg, California Tax Reform Association. I've often referred to many of the things we do here, similar to the previous comment, as working in a data-free environment. And so what this bill does is require that we put data on the table to support what we've done. In the budget processes of September and February 08 and 09, we gave permanent tax cuts to corporations without any criteria for what they would do or what they would create. And just to echo one of the points, it's 2/3, it's a majority vote to create a tax cut, 2/3 to eliminate them, which makes the sunset provision all the more important.
Madam Chair, members, Pedro Morillas from the California Public Interest Research Group, also in strong support of this bill. Taxpayers have an expectation when it comes to how government spends their tax dollars. It only makes sense that we would have clear deliverables for the folks who are getting these tax expenditures and make sure that they do deliver on behalf of the taxpayer. Thank you.
Any more witnesses in support? Witnesses in opposition?
Good afternoon, Michelle Peelsticker, California Taxpayers Association. While we have no problem with performance metrics that are fair, measurable, and can be controlled for external factors, we do have a problem with 7-year sunsets. And the reason we have a problem with 7-year sunsets is that when businesses make a decision to locate in California, they make certain cost assumptions. And if they know that those cost assumptions are going to be eradicated every 7 years potentially, they're not going to make that decision to locate in California. And a tax expenditure would, if it goes away and doesn't come back, would result in a significant increase in cost, and business may not want to take that risk of locating in California, assuming that increase in cost occurs. So for those reasons, we're opposed to the bill.
Good afternoon. Greg Hines, California Manufacturers and Technology Association. I would echo strongly the comments from Ms. Peelsticker. We wholeheartedly support a large majority of this bill. As the author knows, we are supportive of her bill with regards to performance-based budgeting, SB 1020. Again, I would echo the comments from Ms. Peelsticker with regards to the sunset provision. The lack of predictability and stability in this current tax environment as far as when you make your business investment decisions is already woeful. To put a sunset onto something when we make long-range plans on our business investment decisions puts those at risk. A previous speaker on the support side talked about the high unemployment rate in California and the need to promote jobs. I can tell you from the business perspective, if we're making investment decisions now that are going to affect our operations 5 and even 10 years from now, the potential for a tax credit, whether it be R&D, the list goes on of the possibilities that could come out to incent where we may want to be, even in particular AB 32 type credits that might be out there in the future. It's unlikely that we're going to make those decisions here. For those reasons, I would like to suggest if we could amend out the sunset provision, we would be there. I would also say it's very interesting to me, if you look at the list of supporters, a number of these folks are right on the money. We should do periodic review. We should do oversight. It should be a large part of what this body actually does rather than do new bills on a regular basis. We should look back and do taxes make sense? Tax credits make sense that we've done 5, 10, 15 years ago, but also on the regulatory side. And it's unfortunate that our friends in the labor organizations and elsewhere actually oppose similar measures on the regulatory side. I say we should all come together and look at regulatory oversight and TAP oversight together in one package. For these reasons, we have to be opposed to this bill at this time. Look forward to working with the author as it moves forward.
Any other witnesses in opposition? Questions or comments from the committee? I just want to make a comment similar to what I made before. I just firmly believe, given the crisis we're in and the fact that we have a 12.5% unemployment rate in the state of California, we need to create private sector jobs. It's the private sector jobs that are going to bring in the new tax base that's going to fund the programs that we need to have in our government. And one way you create private sector jobs is by giving incentives to businesses to do business in the state of California. And we need to be encouraging private business. By sunsetting tax credits, what you're saying is we're making it more difficult for business to operate in the state of California. So that's just something I firmly believe in, and is the reason I won't be able to support the bill today. Do I have a motion?
Walters?
No.
Walters, no. Wolk?
Aye.
Wolk, aye. Alquist? Ashburn?
No.
Ashburn, no. Padilla?
Aye.
Padilla, aye. 2-2.
Vote is 2-2. We'll hold the roll open.
We'll be pulling that motion out when we get to it.
We do now.
We're just waiting for Senator Alquist, and then we will open the roll and complete the work of the committee.
Are we going to do consent?
Welcome, Senator Alquist. We'll start with the consent calendar. We have item SB 1250, committee bills 1492, 1493, and 1494. Please call the roll. Or the absent members.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. It's 5-0.
5-0. The consent calendar is out. Item number 2, Senator Lowenthal, SB 996. The motion is due pass.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. 5-0.
5-0. That bill is out. Item 3, SB 1028, Senator Correa. The motion is due pass.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. 5-0.
5-0. That bill is out. Item number 4, SB 1036, due pass as amended. The amendment had to do with confidentiality and the commitment to work with Senator Ashburn on making certain that there is an explicit reference to the public entity notifying the taxpayer who owes the money first before contracting out. So, please call the roll.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. That's 4-1.
4-1. That bill is out. SB 1065, Senator Walters. The motion is due pass.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. That's 3-1.
3-1. That bill is out. Senator Price, SB 1076. The motion is due pass. Please call the roll.
Alquist.
Aye.
Alquist, aye. Padilla. Padilla, aye.
1076 is 3. 1065 was 5-0.
1065. Go back.
Yeah.
1 second. 1065.
That was it. Alquist.
Aye.
Alquist, aye. That's 5-0.
5-0. Okay. That was item 5, SB 1065. Due pass, Senator Walters. That is unanimous. 5-0. Senator Price, SB 1076, item 6.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. That's 3-1.
3-1. That bill is out. Item 7, SB 1133. That is a suspense candidate. No vote. Item 10, SB 1337, also moves to the suspense file. No vote. Item 14, SB 1113. That is due pass to rules in order to be re-referred to judiciary for amendment.
Alquist.
Aye.
Alquist, aye. Padilla.
Aye.
Padilla, aye. That's 3-2.
3-2. That bill is out. SB 1272, Wolk. Due pass as amended.
Alquist.
Aye.
Alquist, aye. That's 3-2.
That bill is out. 3-2. Senator Alquist, we accepted your amendment from 5 to 7 years.
And I appreciate it, Senator Wolk.
Thank you
Thank
for
you.
the suggestion. All right. I believe that is it for the committee. Have a good afternoon.